So let's go and have a little look at how exactly you can take this trade on. And this all comes down to understanding simple technical structures, going back to the whole idea about giving a setup edge. What gives this setup edge is the understanding of the positioning. And there's two parts to this, because for me, as a futures trader, I wasn't looking at the options here. For me, I'm looking at that, thinking to myself, this is a grinding move. The implication in my head is that people have now been chasing the market higher to get in. If they're doing that, there are increasingly worse positions. They've got long positions going all the way up here. If the market doesn't keep on going, those people are now in trouble and are going to have to exit quickly. The addition of the put option information now makes this trade even stronger. And it's something that then I can bring into my trading. But that information alone does not actually give you a trade. What you've then got to do is say to yourself, right, how can I actually play this? How do I turn this into something actionable? And this is where suddenly that pennant has so much value to the downside, which is contrary to what most people would be looking for. Most people here are going to be looking at this and thinking that's a kind of flag, pennant, continuation pattern. Market continues to the upside. But instead, what you've got here is the scope for that bigger drop based on the fact that you've got the option positioning, you've got the nature of the move higher, the exhaustion at the end of the move. And all of these things start to fit into a framework of how do you take this trade on specifically. So let's go and have a little look then at how you can bring in that kind of short-term order flow concept to leverage the trade up as well. So here we go. What we're looking at here then is the breakout on this move. And we're going to bring in a couple of small sort of order flow concepts here. The thing that you're looking for is the scope of what can happen. Now what you're looking for is some size to come in, a little bit of pace towards the downside, and you can enter a position. The expectation then is that once the low breaks, this is going to be a fast move. This pennant has got so much more value now. And that's what you're playing for. But then having that ability to scalp, that sort of micro ability to follow a move, to recognize the little shifts in order flow, allows you to then leverage the trade up. It also allows you to continue to add on to the trade as it goes. So we're going to look at this. We're now approaching the low of the day. There's no reason to want to add on at this point. It's not picking up a great deal of pace. You want to see these offers increase at the low. The offers start to increase, try and get in. Miss it, add on then at 30. So now you're in a position where you've seen the move. You have an expectation of this being quick because of the positioning, because of the structure of this move here. And now you can confidently leverage into the trade. So manage to sell 3, sell 6, sell another 3. So we're now up to 9 contracts. And what's happening now, and this is down to that sort of scalping ability, that short-term order flow skill. You notice then where the volume's picking up. You notice where the pace stalls on any kind of little bounce. And as soon as you see that, now you can think, right, now I can go and add in again and again and again. Keep that position going with the expectation. Remember, I said the expectation is this will drop quick now because there is no protection below it. So then you get this acceleration. When the market accelerates, you can then exit part of the position. So you're banking some profit on it with the view that then you're going to add on bounces and play the same game again towards the downside. And all this comes from having a very clear structure around that entire trade. And this comes from asking the right questions. Simply having a bit of information is not enough. You've got to ask the question about, okay, well, what does this mean for the move? What does this mean in terms of how I actually enter the trade, how I leverage the position that I'm getting into? What does this mean for my expectations of how the trade will actually play out? They're the questions that you've got to ask. And that's what I mean by the best traders ask the right questions. They don't simply ask themselves, well, there's a lack of protection here. Where can I sell it? The question then has to be, what's my expectation? Where's my risk around this? There's that framework of how exactly you go about executing on a trade. And this then continues. So we're in here at around 20. The move continues all the way down to 119.00. So that takes you all the way down this bit of the move. We're not going to watch it. It's full half an hour to get going. But you've seen that quick early part of the move and the ability to then leverage in and be able to sort of now carry a larger position for the entirety of that further move. So what you've now managed to give yourself is a framework to find that trade again. Rather than just looking at one thing, the option positioning, and making that your reason to get into a trade, you've now got an idea of looking at the structure of the move beforehand. This grind up and extension higher now can get you to start looking at how option positioning has changed. So each step along the way leads you to look for a new question. It leads you to look for more information. Once that's happened, you've now got an expectation of reversal. But the expectation of reversal is not that it must happen. It's about the nature of how it will happen. Again, now you're looking at it from the point of view. Now you know what you expect to happen. As soon as that starts to play out, now you've got a trade. That's the whole point about having a framework for how you look for this trade in future.